Your insurance company may already know how hard you brake, how often you touch your phone while driving, what condition your roof is in from satellite images, and even details connected to your credit profile, all before you even file a claim. Most people have no idea how much AI is already affecting their insurance rates, which is why in today's video, we're diving into how AI is changing insurance pricing, claims processing, home insurance renewals, and even the way companies decide whether you're considered high risk or low risk. A lot of people think insurance pricing is still mostly based on simple things like your age, driving record, and zip code. And while of course those still come into play, insurance companies now have much more advanced systems than they used to even just a few years ago. AI models can now analyze huge amounts of data incredibly quickly, and in many cases, insurance companies are looking at dozens of variables instead of just a handful. Some of this technology genuinely helps careful drivers and responsible homeowners save money, but there are also growing concerns around transparency, accuracy, and how these systems make decisions that directly impact people financially. So let's go ahead and get into it. Now, first off, one of the biggest ways AI already affects car insurance is through telematics programs. You've probably heard of programs like Progressive Snapshot, State Farm Drive Safe and Save, or Allstate DriveWise. These programs usually involve an app, plug-in device, or built-in vehicle tracking system that monitors driving behavior. What surprises many people is how much information these systems actually track. And depending on the program, insurers may monitor things like hard braking, rapid acceleration, cornering behavior, phone use while driving, time of day you drive, mileage, and how often you're on the road overall. AI systems then analyze all of that driving data and generate a risk profile that directly impacts your insurance premium. For some people, this can work extremely well. If you're a low mileage driver, avoid heavy traffic, rarely drive late at night, and generally drive pretty cautious, telematics programs can sometimes lower premiums significantly. But of course, these systems can absolutely work against certain drivers as well. Now let's talk about home insurance, because this is where things start to get really interesting. A lot of homeowners still assume insurance companies mainly rely on inspections that happen physically in person, but many insurers now use AI-powered satellite aerial imaging technology to assess properties remotely. These systems can analyze things like roof condition, debris buildup, overhanging trees, visible property deterioration, and other potential risk factors without anyone ever physically visiting the property. And this is becoming a bigger deal than most homeowners actually realize. Some people have reportedly received non-renewal notices or underwriting warnings based partially on AI image analysis of their home. For example, if an insurer's system flags a roof as potentially aging or damaged from aerial imagery, that could trigger additional review or even non-renewal discussions. The difficult part is that AI image analysis is not always perfect. Satellite images can sometimes miss context, create inaccurate assumptions, or flag properties incorrectly. And homeowners may not even realize what specifically triggered the concern unless they ask detailed questions. That's why if you ever receive a non-renewal notice or underwriting concern from your home insurance company, it's important to ask directly what triggered the decision. If the issue involves roof condition or property maintenance, having recent inspection reports or updated photos can sometimes help challenge inaccurate assumptions. And honestly, going forward, visible property maintenance may matter even more than people realize, because insurers increasingly rely on visual risk analysis technology behind the scenes. Another area where AI and advanced data modeling affect insurance pricing is credit-based insurance scoring. A lot of people are shocked when they learn their credit history may affect insurance premiums in many states. And to make things more confusing, insurance companies often use something called an insurance score, which is separate from your traditional credit score, even though the two are related. Insurance scoring models analyze financial patterns and attempt to predict risk. Insurance companies argue that certain financial behaviors statistically correlate with claim likelihood. Currently, most states allow some form of credit-based insurance scoring for auto insurance, although a few states like California, Hawaii, and Massachusetts do restrict or prohibit it for auto coverage. What's important to understand is that different insurance companies weigh credit-related factors differently. This is why one insurer may heavily personalize lower credit profiles, while another company may price much more favorably for the exact same person. This is another reason shopping around matters so much. So if your credit situation has improved recently, or if you've struggled finding affordable coverage in the past, it's often worth re-shopping your insurance because the pricing differences can be surprisingly large. So if you want to go ahead and compare your auto or homeowner's insurance, we do have an exclusive link down below where you can go ahead and get a bunch of different options based on where you're at. So all you have to do is click our link down below. And so for the homeowner's insurance comparison, all you have to do is enter in your zip code if you own or rent, answer a couple of other questions, even if you know your credit score, or if you don't know, that's okay too, and then go ahead and submit. And then same with car insurance. So all you have to do is go ahead and enter in your zip code, answer a couple questions, and you'll get a bunch of different options. Again, like I said, it's really important to get a bunch of different quotes because things change and insurers are very different. So you could get the same coverage for a better price, even in the exact same situation. So it's really important to compare options. AI is also changing the claim side of insurance. Some companies now use AI-assisted systems to process certain claims incredibly quickly. Lemonade became especially well known for advertising AI-powered claims approvals, where some smaller claims were reportedly processed in seconds. Honestly, many major insurers now use some form of AI-assisted claims handling behind the scenes, even if they don't market it heavily. For straightforward claims, this can actually be a really positive thing. Simple claims may get processed faster, paperwork can move a lot quicker, and customers just spend way less time waiting for decisions. But there's also another side to this as well. AI systems are also heavily used for fraud detection and claim risk analysis, so while some claims do move faster, others may get flagged for additional scrutiny much more aggressively than before. Complex claims, higher dollar claims, inconsistent documentation, or unusual claim patterns may automatically trigger additional review systems. And sometimes that can feel frustrating for customers because they may not fully understand why the process suddenly slowed down. But the important thing to know is that if your claim gets flagged or delayed, you generally have the right to request human review and speak directly with the claims adjuster. A lot of people assume AI decisions are final, but that's not necessarily true. Don't be afraid to follow up if you need to. So what does all this actually mean practically for everyday people? For auto insurance, telematics programs can genuinely save money for careful drivers and predictable habits, but they're probably less attractive for people constantly driving in heavy traffic, commuting long distances, or working unusual hours. For homeowners, maintaining the visible condition of your property matters more than ever. Roof maintenance, debris removal, tree trimming, and documenting repairs can all become important if insurers increasingly rely on aerial image analysis. And when it comes to shopping for insurance overall, AI-driven pricing differences between companies are becoming huge. Two insurers can look at the exact same driver or homeowner and produce dramatically different rates because their models risk differently. That's why, again, comparing multiple quotes matters so much more than ever. So again, those links are down below if you want to go ahead and get a bunch of different options and compare different prices. Whether people realize it or not, AI is already deeply integrated into modern insurance pricing and claim systems. It's affecting how companies evaluate driving behavior, how homes get inspected, how claims are processed, and how rates are calculated behind the scenes. And while some of these changes can genuinely benefit responsible drivers and homeowners, it also means consumers need to pay closer attention to how insurers are evaluating risk than ever before. I do want to mention that comparison links are affiliate links, which means we may earn a small commission at no extra cost to you. So if you do choose to use our links, we just want to thank you so much in advance for supporting our channel. It really helps us to continue to create free content just like this. This channel is dedicated to helping you understand insurance so you can make smarter decisions for your money and your future. Don't forget to like, subscribe, and leave any comments or questions below. We'd love to hear from you. Thank you so much for watching, and I'll see you in the next video.